Hello, this is Mark Silverman, managing member and founder of Silverman & Associates, and I'm also a certified financial planner professional. I want to welcome you to the Saving with Silverman podcast. I'm glad you're here. Each week, we'll discuss different financial planning topics because making smarter choices about your money impacts the quality of your life.
Welcome to Saving with Silverman. Of course, the star of the show is Mark Silverman of Silverman & Associates. And Mark, it is always good to be with you, and I'm looking forward to another great hour on the radio here.
Ron, always happy to be here, and I want to thank everybody for taking the time to listen. I think we got some good topics coming up.
This is Ron Stutz along with Mark for an hour of Saving with Silverman, and we have a lot of important things to talk about today. If you like the things that Mark says, if you've been listening for a while, you know what Mark Silverman is all about. Write down this number if you haven't already, 520-333-7601, 520-333-7601. If you're new to the show, you can call or text. Again, that number is 520-333-7601. That number will put you in touch with Silverman & Associates in Tucson. And I know that that is a conversation that you can arrange, and you can come in for a little while and have a conversation face-to-face with Mark. He's not going to put you off on anybody else. It is a one-on-one conversation, no pressure, no obligation whatsoever. 520-333-7601. Again, call or text. Well, Mark, a lot of people have been talking and thinking about market volatility. We've seen a lot of it recently here. And whenever the market is experiencing a great deal of volatility, you get a lot of concern calls from your clients?
Well, actually, not really. I mean, I'm not going to say I didn't get any calls or emails from some of my clients, but not a lot. You know, I meet with my clients on a regular basis, and I reach out to them. In fact, as I mentioned, I sent out an email to my clients kind of talking about all the volatility and what's going on and to kind of staying focused. But really, staying in regular communication with my clients and keeping them abreast and focusing more on the long-term aspects of the market rather than the day-to-day stuff. Because if you focus on the market on a day-to-day or even hour-to-hour, minute-to-minute of what's going on, it'll just eat you up inside. So that's why you got to focus on the long term and realize that the markets don't always go up, and the markets will go up and they will go down, and that's normal, but not to sensationalize it like the news media tends to do.
Well, if you focus on it day to day, it might give you high blood pressure and indigestion for sure. But we have seen a lot of volatility lately, but it's only compared to what we've seen lately. A lot of people are just surprised that, we haven't had it go down like that in a very long time. How should people react and handle their investments during times of market volatility? Well,
the one thing that I think is a positive with the market volatility is it gets people, maybe helps them realize the perspective of maybe the markets. You can't expect the markets to go up each and every day. It is normal for the markets to correct. And so I think the key is to make sure that you understand that the markets will correct and in relation to where you are. If you have a long time period before you're retiring or retired, then it shouldn't really matter. You should be focusing on the long term. The day-to-day stuff shouldn't bother you. But if you're close to retirement or certainly in retirement, I think it makes a bigger difference because you need to understand that, you can't expect a certain rate of return from the market each and every year. The markets are going to do what the markets are going to do. So it's important to really focus on your goals and make sure that you're taking the amount of risk that's appropriate rather than the amount of risk that's going to get you the highest return at all times. Because, and I've said this before, it's not the win, but the set of the sail. We could minimize the risk. There's a risk reward, more risk, more return, less risk, less return, but you should be taking the amount of risk that's appropriate, being one that you're comfortable with, and two, that's going to keep you on track for your goals.
Mark Silverman, following up on those comments, if you're already retired or you're retiring soon, is it okay to have some volatility in your portfolio, or does it need to be avoided altogether at that stage of your life?
Well, I think everybody's going to have some type of volatility. It's going to affect some people unless you're out of the stock market completely. But if you're in the bond market, that's going to depend on interest rates, which is affected by the stock market too, because when the markets go up, rates tend to go up as well. When markets go down, rates tend to go down. And so that's typically what happens. But, so everybody has some amount of volatility. The amount of volatility should depend on those things that we just discussed. But that's why it's so important to have a plan to focus on the long-term aspects rather than, again, the short-term, volatility of the market.
You're listening to Saving with Silverman with Mark Silverman of Silverman and Associates, and we're talking about market volatility. Give an example of a time when you saw someone get severely damaged by market volatility because they didn't have a well-constructed retirement plan.
I just had somebody recently come in the office, and they had printed up their statement from the end of January and then brought in their statement. They did a print up of just the value of their account from online just the other day. And it was, obviously this volatility kind of just started the last couple of weeks. And so, they were concerned because of the fact of how much it changed, which nobody has a problem with it changing when it's going up. The problems exist when the markets go down. And so they were comfortable, of course, with all the risks that they had in their portfolio when it was going up. But when it starts to go down, they're not so comfortable. So people just need to realize that markets do go down, and this is a reality. And so the key is to really, again, focus on the long term. So with this particular person, we're in the process now where we're constructing a plan for them, and we've analyzed their risk, and we're, like I said, in the process where we're going to show them how much risk they're taking in relation to how much risk they've indicated they want to be taking, and then we'll compare that to their goals and objectives to make sure that that risk is going to keep them on track to achieve all the things that they're looking to do.
Mark, you always say have a well-constructed, well-thought-out plan and stay calm. But what's your advice to those people out there who lose sleep or worry a lot about what's happening in the market on a week-to-week basis, or even, as you mentioned earlier, a day-to-day basis?
Work with someone that's going to help you with these sorts of things, that can sit down and kind of walk you off the ledge, if you will, as far as really understanding the risk that you're taking and understanding your goals and objectives. That's going to take the time to build a plan. Work with someone. If you're doing it yourself, this is probably a good opportunity to realize, and this is where most people realize maybe they don't know what they're doing if they're doing it themselves, or people that are working with an advisor that realize maybe that advisor isn't looking out for their best interest if they're not communicating with them and they're not, helping them through these tough times. It's easy to be an advisor with clients when things are going well. The question is, can they help you when things aren't going well, and really help you focus on the important things rather than things that are out of your control as well as out of your advisor's control. So, come in and have a review, those sorts of things, or go seek another opinion from somebody else until you can get a comfort level that's not going to, so you don't focus on the negative and, turning on the news and the media and seeing all these things that are just going to make things worse in your mind.
Mark, I know that there are people listening out there today who find themselves in that situation. They're really worried and stressing out and lying awake at night, wondering about what's going to happen and what kind of shape they're in. What do you have to offer those folks who reach out with a phone call and decide to come in for a conversation?
Sure, Ron. So whether you're a first-time listener to the show or you've heard me for a long time, if anything I've said makes sense or resonates with you, this is now your opportunity to come in and have a conversation with me. I don't pawn you off on somebody else like some of the other shows. To come in my office and go through this process that we call the financial physical. And I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. This is not a place where you come in and we're going to, shove an annuity down your throat. We don't do that. Rather, we're going to discuss your values and goals in a way, honestly, you probably never have. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. And as part of the financial physical, we will discuss your cash reserves, debt if you have any, insurance, all types, and how to best allocate your assets. And we'll even benchmark where you are now financially compared to where you want to be, so you have an even better perspective of what's required to achieve your goals for the reasons that are important to you. This will become the foundation for developing a plan that gives you the highest probability of making that happen. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware, I am a certified financial planner professional, and I believe the only one locally here on the radio in Tucson. And the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. We try our best to help everyone, however, our slots fill up quickly. So I can only guarantee a complimentary meeting for the next 5 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
520-333-7601 is your number to call, or text 520-333-7601. You can get the financial physical, no obligation, no cost whatsoever. Call the number and get in touch, 520-333-7601. Mark Silverman is a certified financial planner professional, the founder and managing member of Silverman & Associates in Tucson. And once again, that number is 520-333-7601. You're listening to Saving with Silverman. I'm Ron Stutz, along with Mark Silverman, and we'll have more coming up in just a moment.
Mark Silverman is a lifelong Arizonan, and his firm is based right here in Tucson. When you come in for a visit, you can expect someone who's familiar with your community. At Silverman & Associates, our relationship with you is most important to us. We want to build you a financial plan that's unique to your goals. No generic products, no corporate red tape, just friendly folks looking to give you a comprehensive approach to retirement planning. Come in for a visit today and let us help you build a meaningful retirement. Call or text 520-333-7601. That's 520-333-7601.
Extra, read all about it.
You're listening to Saving with Silverman. I'm Ron Stutz, along with Mark Silverman. Always love doing the show with Mark, spending an hour with Mark every week. And Mark, of course, you're a certified financial planner, professional, the founder and managing member of Silverman & Associates. Mark can be reached at 520-333-7601. You can call or text 520-333-7601. It is time now for In the News. Let me put on my newscaster's hat here for a moment, Mark. The market has had some bad days recently, some up and down days, a lot of volatility. What do you attribute this to?
You know, I'm not really sure, to be perfectly honest with you. I've read a lot about this. I've listened to been on numerous conference calls and trying to figure out what's gone on. I mean, the fundamentals of the economy are strong. In fact, I just sent an email out recently to my clients, informing them as far as what's going on, because in my opinion, that's why clients need us through when markets more challenging than they do when the market's, just going straight up. Mm-hmm. But staying in communication is the key. But, I really think it comes down to, it's a self-fulfilling prophecy. You see the markets go down on a certain day, and, the media makes a big deal about it. They were talking about the record number of points being dropped in the Dow Jones. The Dow is not something that most people track. The S&P is a better indicator as far as with what most people are looking at, but the Dow sounds better. So people talk about the Dow, and then they talk about the biggest point drop. Well, when the market's going up and up, points don't really make a difference. It's percentage. And so as the market gets higher, the points become less relevant. But the percentage is what's more relevant as far as the drop. But, I think, it's the media's made a big deal about it because, bad news sells and that sort of thing. So I think, people start to read and see things, and, they see the market's down. So then more people want to sell, and then more people want to sell. And it kind of, like I said, is a self-fulfilling prophecy. But, the markets are going to be volatile. I think that trend's unfortunately not going to stop, but we're going to see big shifts in a given day. And I think that's not going to change. You have to get focused a lot more long-term rather than trying to predict what the market's going to do each and every day or every hour, every minute, actually.
Well, it's certainly, we haven't had this kind of volatility in a while, and I think it really surprised a lot of people. And, everybody just needs to remember, like you said, stay calm and just think of the long run, and everything's going to work out all right.
I think given this bull market, people aren't used to seeing the market go down.
Mm-hmm.
I think people just become accustomed to the market just going up and up. And unfortunately, that's not how it works. There's going to be up days and there's going to be down days. Again, so you got, like you said, you got to focus on more of the long term.
Yeah. Well, if you have a good plan put together, then, you don't have to be alarmed. And Mark Silverman, of course, can help put together a plan for you by giving you the financial physical to make sure that you know what kind of shape you're in. And you may be in better shape than you think. Call 520-333-7601. Call that number or send a text, because making smarter choices about your money impacts the quality of your life. We'll have more coming up in just a moment here on Saving with Silverman.
Planning for retirement shouldn't be a mystery. So why is it so easy to get bogged down with financial terms and advisors who try to offer you a sales pitch? At Silverman & Associates, Mark Silverman and his team take pride in looking after their clients' best interests. They strive to educate you about the financial world. If you want a customized financial plan that's unique to your goals, schedule a visit with the team today. Schedule a complimentary review of your situation. Call or text 520-333-7601. That's 520-333-7601.
Mark Silverman is a Tucson native, and his firm is right here in town. That means he's always accessible to you. Start your relationship with Mark and his team today. Keep listening to Saving with Silverman.
Welcome back to Saving with Silverman. Ron Stutz here along with Mark Silverman, your certified financial planner professional at Silverman & Associates. If you'd ever like to check out Mark's business, you can go to the website, savingwithsilverman.com. But the most immediate thing that I can tell you right now, and very important, here's the phone number, 520-333-7601. You can call that number or you can text, and you can do it right now. Don't even wait until the end of the show, 520-333-7601. That is a way to get on the calendar so you can come in and have a conversation with Mark about your financial situation. 520-333-7601. No obligation and no cost. We're going to call this segment 2020 Hindsight. We all wish we had 2020 hindsight. And actually, a lot of us do think we have 2020 hindsight, but it's easier to look at it when it's in the rearview mirror than when it's actually happened. Just like any decisions in life, making financial decisions would be a lot easier with the benefit of hindsight. So, Mark, let's talk about some of the things you might hear from people who wish they had done things differently after they take a look in their rearview mirror. First of all, someone who says, I got scared after 2008. I put all my money in cash. Now I'm kicking myself for missing a great decade in the stock market. First of all, have you had someone say that to you? And second of all, what's your advice to them?
I've actually seen that. Yeah, I actually still see it. And it's unfortunate because this is the second longest bull market we've ever been in. And so each day we're closer to a correction. It seems like we may be in the midst of a correction, but it's so far it seems like it's been up and down sort of thing. It hasn't been just straight down. But, you can't change, there is no such thing as, hindsight being 2020. You can't change what you've done in the past. You can only move forward from then on. So it's appropriate that you look and see where you are in relation to your goals. Are you already retired? Are you a few years away from retirement? Are you decades away from retirement? Look at your risk tolerance, your comfort level, and have the right proper allocation and have a plan of how you should be investing going forward, knowing that you don't know when the market's going to be up or down and that sort of thing, because we never really do. But it's important that you look at your goals and objectives and make sure that you have a solid plan and you're taking the right amount of risk that's appropriate. Because if you're sitting too much in cash, as we've said before, you're losing purchasing power each and every day.
Mark, I know that you've met people who say that they wish they had known how much risk they had in their portfolios before 2008, and they took a huge loss. What would you say to them at this point?
Well, this is human nature. This is what's called greed. And as the market goes up and up, more and more people are not more comfortable taking, but they are taking more risk in their portfolio, because risk is only a problem when the market's going down. The more risk, the more return typically. So risk is never an issue when the market's going up. Risk only becomes a problem when the market's going down. And a lot of people, didn't realize how much risk they were taking until, 07 hit and through 08, through 09. And so, again, some people maybe have recently realized how much risk they've taken if they've looked at their accounts through this volatility we've seen recently. So, it's important that you understand these sorts of things and that you're taking the appropriate amount of risk at all times, because nobody can time the market.
You're listening to Saving with Silverman with Mark Silverman, and we're talking about 2020 hindsight. And Mark, I know a lot of people fit into this category that I'm getting ready to mention here. A lot of folks say, I didn't really understand my options with Social Security, and I should have waited to start taking it later. What can you tell those people?
Yeah, unfortunately, with Social Security, it's like a pension. Once you take it and it's set, you pretty much are stuck with it. You can't change it. So it's important that you have all the answers and all your questions answered before you elect to take Social Security. because, and this is a report that we run for people, so part of our planning process is for people that haven't elected Social Security, we'll look at what their benefit amounts are. If they're married, we'll look at both benefit amounts, and we can look at the different ages of when somebody could take it. You know, if you take it early at 62, or full retirement age, which for most people is somewhere between 66 and 67, or deferring it to age 70, which is where it maxes out. The benefit of deferring it is you get 8% guaranteed compounded per year. And as I tell people, the only place you get 8% guaranteed is through the government. That doesn't exist anywhere else. Not even the annuities, when these people on the radio are touting 7 and 8% guaranteed rates of return, which is not a real number, by the way. So, you know, again, getting back to the Social Security, it's important to understand these things. And like I said, we have a report that we can show you what those dollar figures look like so you can maximize Social Security. Because if you call, you know, go down to the Social Security office here in Tucson, or you call, they're not there to give advice. What they're there is they're order takers. You tell them what you want to do. They're not going to give you advice. And I can't tell you how many people have come into the office and wish they would have known all the different nuances with Social Security before they had elected it, because you can't change it typically.
Mark Silverman, of course, is a financial planner, and he can give you advice and help keep you from making those mistakes that a lot of people have made. How about the person who says, I should have put more money in a Roth IRA instead of saving so much in my 401k? What would your advice be to that person?
You know, I don't really see that too often. I mean, I think Roths are an important thing to have. You know, if you're able to contribute to a Roth, you certainly should. If you're not able to contribute to a Roth, you may make sense to do some partial conversions at some point. If you're still working, or if you're retired and that sort of thing, you know, partial conversions can make sense. But putting more money in your 401k, in my opinion, is a better option, because you can put more money into a 401k. You're limited on contributing to a Roth than you would be if you have an employer plan. And so I don't see that too often, to be honest with you. But I think, you know, having a Roth IRA could be a great financial planning tool to have going down the road.
Well, here's a final scenario I want to ask you about, and this is really sad. How about the person who says, I probably retired too early. Now it's hard to make ends meet, so I might have to go back to work.
And that's the whole problem with people retiring without a plan. You know, even if you're working with an advisor who basically just, you know, sold you a bunch of products, whether it be annuities or mutual funds or whatever it might be, you don't really know where you stand. You don't really know if you're going to have enough money to do all the things you want to do and need to do in your retirement. Do you have enough money to last? Without a plan, you don't know that answer. Your advisor doesn't know that answer. And so that's the big problem there, because if you do leave your job, chances are you might not be able to get that job or as good of a job back if you need to. And when you do retire, you know, a lot of people don't want to have to go back to work. They're retiring because, you know, what we call work optional lifestyle, working because you want to, not because you have to. And so the problem is, if you leave a good job, you may not be able to get that type of a job back. And so, you know, that's why we have a planning process where we help with those decisions. And, you know, with a high level of predictability that if you retire, you're going to be okay. Or if there are problems, you know that going in, so you can make that decision before you end up leaving your job.
Mark, I know that there's some people out there listening to the show today who find themselves with these situations. They made mistakes in the past. Maybe they put their money in cash when they shouldn't have, or maybe they had no idea how much risk they had. Some people made some mistakes with Social Security and when they started to take it, and some folks regretting putting their money all in a 401k and not in a Roth IRA, and some folks retiring at the wrong time. I know that some of those folks are going to reach out today after the show and come in and have a conversation with you, but what kind of advice and what do you have to offer those people?
Well, just like you get a second opinion on your health, why wouldn't you get a second opinion on your wealth? So if you're a do-it-yourselfer or already working with someone, this is now your chance to go through this process, and we call it the financial physical. Do you know what your investments are costing you? If you're still working, are you on track to have the type of retirement you have always envisioned? Or if you're already retired, do you know if you or your spouse are at risk of running out of money while trying to maintain your current lifestyle? I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. In this initial meeting, we'll address issues of importance to you, provide an overall view of your situation, and give you some general advice on what needs to be completed. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who is actually required to have a fiduciary responsibility to look out for your best interests at all times. And I can tell you, if you're working with somebody at a bank, a brokerage firm, a wirehouse, somebody that's selling you an annuity, an insurance salesperson, they do not have a fiduciary responsibility over all of your money. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware, I am a certified financial planner professional, and I believe the only one local here on the radio in Tucson. And the going hourly rate to me with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. Just as you want to reach a healthy life from a physical standpoint, you also want to reach and maintain great financial health. So our financial physical is just what the doctor ordered. We try our best to help everyone, however, our slots fill up quickly. So I can only guarantee a complimentary meeting for the next 5 people that contact us right now. Please don't procrastinate because making smarter choices about your money impacts the quality of your life.
520-333-7601. Call that number right now. Don't wait. 520-333-7601. If you prefer to text, you can do that. Instead, don't have to talk to anybody today. Just leave your contact information, and a member of Mark's team will reach out to you, and you can arrange a time to come in and have a convenient conversation, very comfortable conversation, no high pressure, and you're going to get a lot of information out of this with no obligation. 520-333-7601 is your number to call or text to make it happen. You're listening to Saving with Silverman. Ron Stutz here, along with Mark Silverman, certified financial planner professional at Silverman and Associates in Tucson. And there's more coming up after this quick timeout.
At Silverman and Associates, we believe you deserve a financial plan that's customized to your situation. That's because no one strategy could possibly fit your unique needs and goals. From strategizing to execution, our goal is to give you undivided attention. Come in for a visit today and learn what it looks like to put your retirement dreams into action. Call or text 520-333-7601. That's 520-333-7601.
It's time to get to know Mark Silverman just a little bit better here on Saving with Silverman.
Welcome back to Saving with Silverman. This is Ron Stutz along with Mark Silverman of Silverman and Associates. Mark, of course, certified financial planner professional, the founder and the managing member of Silverman and Associates. And Mark, I got a quick question here for you on our Getting to Know You segment. What's something major that you've changed your belief or opinion on during your lifetime?
Ooh, that's a tough one.
Got to think about that one for a minute.
Now I got to think. I would say everything happens for a reason. And sometimes in the midst of things, when it's happening, you don't know what that reason is.
Yeah.
But you come to find out later on that everything kind of works out in the end if you always try to do the right thing and take the higher road. I guess that's kind of the way I would phrase it, I guess. So I guess everything happens for a reason. You just don't always know what that reason is at the time.
That's exactly right. I agree with you completely. And the important thing is just to try to do the right thing and just, wait for whatever happens in the long run. And
exactly. Most of the time
it's for the better, So anyway, folks, that is our Getting to Know You segment. Mark Silverman, a little philosophy for you here today. And we'll have more coming up on today's edition of Saving with Silverman.
You've got questions. We've got answers. Keep listening to Saving with Silverman.
Thanks for listening to Saving with Silverman with Mark Silverman. He's on the radio each and every week, giving all kinds of generic advice, but can't really give even specific advice as it relates to your situation without knowing more about you. And that's why it's so important to call this number, 520-333-7601. That's 520-333-7601. Call, or you can text if you prefer, and you can get on the calendar and come in for a conversation. No obligation, no cost, 520-333-7601. Just leave your contact information and you can come in before you know it and have a conversation with Mark Silverman about your situation. Let's talk about stuff you should know. Mark, I know there's a lot of stuff I should know and I don't, and I'm sure that our listeners have the same situation. There's a popular podcast called Stuff You Should Know, but it doesn't have anything to do with the financial world. Today, we're talking about stuff you should know in the financial realm, and you can tell us why these things are important here. The global bond market is about twice the size of the global stock market. Why is that important for folks to know, Mark?
I think that's important because so many people, for whatever reason, feel that they shouldn't have bonds in their portfolio. I know interest rates are low, and some people argue, why would I own a bond when the interest rates are low? The reason is because interest rates are going to go up and they're going to go down. We know that. But the other thing is you need diversification. And unless you're younger, you shouldn't have all of your portfolio in 100% stocks. Unless you're, 20, 30 years away from retirement. Most people need a diversified portfolio, which a diversified portfolio is going to have some portion in bonds. How much bonds? It really depends on where you are in relation to retirement, your risk tolerance. There's other factors that are involved. But I think it's important to note that the bond market, as you said, is bigger than the stock market because there's more things to invest in than just putting all of your money into the stock market. Stock market is important, I will say that. And most people should have some money in the stock market, and an extent's going to depend on certain factors that are specific to your situation. But I think that's the reason why you want to have a diversified portfolio is because you need different asset classes in there.
Okay, more stuff you should know. Income tax rates are currently close to historical lows. And I know that's certainly worth having a conversation about, right?
Yeah, I mean, when we do our planning, we have to make certain assumptions, and income taxes is always part of the equation. Everybody's got to pay their taxes. But there's certain decisions you can make that are smarter, which can minimize the taxes that you could pay legally. And so those need to be taken in consideration. But, overall, our tax rates are still historically low, even though we've seen income tax rates spike up the last couple of years. Hopefully this year we might see them go down a little bit for certain people, and we'll see how that plays out. But, taxes are still historically low compared to where we have been.
This next one here is one that we've talked about some, and a lot of people don't even know about this. Living benefits, or accelerated death benefits is another way to put it, on life insurance policies are a long-term care solution that not many people even know about.
That is true. Most people aren't aware of those. But, and when it comes to long-term care, everybody needs a strategy. And whether your strategy is to buy traditional long-term care insurance, or it's to, self-insure, which means if you need to go in or your spouse needs to go in, you're going to just pay for it out of pocket, or have this, the state take over if you're, in that situation, or you use, certain annuities out there that can cover long-term care benefits. But my preference, and I think what makes the most sense, is using, permanent products, so not term, but permanent products of life insurance that offer these long-term care benefit riders, which can pay for long-term care stays. And I think it's a great option. I think it's better than using traditional long-term care insurance. And if you do have an old policy that you're paying on, I wouldn't say just drop it, but this is a great option that hasn't been around as long, but it works very, very well and can solve that issue. It's a great way to leverage your dollars, smaller dollars today, to pay out larger dollars tomorrow, using life insurance to pay for long-term care expenses. And it's something that we go through and we have this discussion, almost with everybody.
Mark, we've been through this a lot of times, and people who come in to see you for the very first time probably, a lot of them don't have any idea what kind of risk they have in their portfolios. But I think it's safe to say that with most folks, they probably have more risk in their portfolios than they realize.
Certainly with this bull market, that's certainly true. Part of our financial planning process that we follow is we do a risk assessment, and we'll actually determine, and we use an online tool which gives us a number as far as how much risk you're comfortable taking. Then we will take that and we'll actually compare it to people's investments without moving assets, that sort of thing. We'll take your current portfolio, plug it into the software, and show you in relation to the risk that you're comfortable taking, how much risk you're taking. And like you said, about 80% of the time that we do this, we find people are taking more risk than they've indicated they're comfortable taking. And I think that also, like I said, has to do with this bull market, and greed starts to set in, and when the markets keep going up and up, more people want more risk, when maybe in reality they should be taking on less risk because they're getting closer to retirement or in retirement. And so this is a process that we find that's very, very important, and it's a great exercise that we enjoy, and I think clients really get a benefit from it.
We're talking about stuff you should know on today's edition of Saving with Silverman with Mark Silverman. And Mark, the biggest impediment to making good financial decisions is your own emotions. Would you agree with that?
It is. I mean, dealing with human nature is probably one of the most important things that we do. Just looking at certain things and keeping people, making sure that they're not going to be their biggest enemy. I've used this quote before. There are plenty of difficult obstacles in your path. Don't allow yourself to become one of them. And sometimes we could be our own worst enemy by, not being logical and making rash decisions and getting in and out of the market at inappropriate times. And there's been a lot of studies that have shown like the returns on the equity markets versus the return of an equity investor. And those two are significantly different because people, get in and out of the market at the wrong times. And that's why if you have somebody there that you trust that can walk you through these and keep you invested during the important times, because I can tell you, if you miss some of the most important investing days, you miss a lot of the returns just being out of the market, trying to time it, that sort of thing. So it's important you work with someone who's not going to get you in that position and that can really walk you through it and help you focus on what truly matters, which is your goals and objectives.
A lot of folks out there in Tucson and all around the area are going to make a phone call at the end of this program, and they don't have to wait until then. They can do it right now. But what do you have to offer those folks who go ahead and call or text to the number that I'm going to give out?
Well, whether you're a first-time listener to the show or you've heard me for a long time, if anything I've said makes sense or resonates with you, this is now your chance to come in and have a conversation with me in my office to go through this process we call the financial physical. And I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. Rather, we'll discuss your values and goals in a way, honestly, you probably never have. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interests at all times. And as part of the financial physical, we will discuss your cash reserves, debt if you have any, insurance, all types, and how to best allocate your assets. And we'll even benchmark where you are now financially compared to where you want to be, so you have an even better perspective of what's required to achieve your goals for the reasons that are important to you. This becomes the foundation for developing a plan that gives you the highest probability of making that happen. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware, I am a certified financial planner professional, and I believe the only one locally here on the radio in Tucson. And the going hourly rate to meet with a CFP, such as myself, can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. We try our best to help everyone. However, our slots fill up quickly. So I can only guarantee a complimentary meeting to the next 5 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
Call or text 520-333-7601. That is 520-333-7601. It's all about getting on the calendar right now. You don't even have to talk to anybody today. All you got to do is leave your contact information. A member of Mark's outstanding team will get back with you. You can set a time that's convenient for you to come in and have a conversation with Mark Silverman at Silverman & Associates in Tucson. 520-333-7601. Whether you're in Tucson or anywhere in southern Arizona, call that number 520-333-7601 or text and have a conversation with Mark. I promise you're going to glean a lot of information from that conversation. There's no pressure, no sales pitch. Mark Silverman is a fiduciary, which means he has your best interest at heart. And again, call that number and you can get connected. All right? More coming up on today's edition of Saving with Silverman.
Learn the path to a worry-free retirement. Keep listening to Saving with Silverman.
Welcome back to Saving with Silverman. And Mark Silverman, of course, the star of this show. He's serving Tucson and the entire southern Arizona surrounding area. And if you'd like to find out more about Mark, you can go to savingwithsilverman.com. That is your Silverman & Associates website. That is savingwithsilverman.com. And Mark, it is time for story time. I know you've been doing this for long enough. You've got loads of stories you could share with us, but try to narrow it down to just one here. Tell us about your very first client. Do you remember that person? And do you remember how you got them in the first place and what you were able to do to help them?
I actually don't remember my first client. I mean, I'm pretty sure I know how I got them. I won't say the name of the firm, but I started right out of college here in Tucson working for one of the major wirehouses, which is still around. But we used to this is talking, early mid-90s, we used to cold call people and send out muni bond lists to people. Mm-hmm. And so I would assume that my first client came from doing that. We would mail out these muni bond lists of what was in our inventory and then follow up and see if it was a good fit for people and see if that's what they were if that was going to help their situation. Back then, interest rates were a lot more attractive than they are now. So, that's kind of what we did. I don't remember who my first client was though back then. We're talking 20 plus years ago. Yeah. But it was probably from cold calling, which doesn't exist today, because with caller ID and all that sort of thing, those, you can't really do that anymore. Although I do get people cold calling me on auto warranties and this and that and all sorts of different things. So I don't think there is a do not call list anymore. I wish there was. But there you go.
Do you get those calls, those unwanted calls on your cell phone these days?
Nonstop, and I get them, and I've registered my phone, my home phone, as well as my cell phone on the National Do Not Call Registry, which used to be a thing back in the day. We'd get fined if you called somebody if you didn't check the list.
Sure.
Nowadays they call you, and I guess they don't enforce it anymore. But I get calls constantly. It's quite frustrating.
Same with me. It really is a pain. Well, Saving with Silverman will continue in just a moment, but let me very quickly here give you the phone number you can call or text, 520-333-7601. That is 520-333-7601. Call or shoot a text in that direction if you like. That'll put you in touch with Silverman and Associates. More coming up after this.
If you've ever asked yourself what a well-balanced financial portfolio looks like, keep listening to Saving with Silverman, and you'll find out.
Welcome back to Saving with Silverman. Ron Stutz here along with Mark Silverman, your certified financial planner professional at Silverman and Associates. 520-333-7601. Very important number. You can call or text that number, 520-333-7601. Get on the calendar, and it fills up fast, 520-333-7601. Come in for a conversation about your financial situation and make sure that you're well prepared for retirement. That's what the show is all about, to achieve peace of mind. Time now for the request line segment of our show, and we always get great questions. I have a question today, Mark, from Beth in Green Valley. Beth says, I have almost $150,000 sitting in my savings account, and I'm tired of getting virtually no interest on it. But I'm also too scared to invest it right now. Should I just leave it in the bank?
Well, Beth, that's a great question, and it's one that we've come across quite a bit. Having too much cash, as I said earlier, you're losing purchasing power. So that's the biggest problem. You do need a certain amount of cash, and that the general rule is 3 to 6 months worth of expenses should be liquid. So if your expenses per month, let's say, are $5,000 a month, you should have somewhere between $15,000 to $30,000 liquid at all times. For some of our retired clients, we'll even get more conservative, and we'll go up to 12 months. So in your case, 60,000 should be liquid at the most, if 5,000 is your number. So you can kind of figure that out. But I can tell you, any more than that, you need to have it diversified. Doesn't mean you have to put it in the stock market, but you should have it in a diversified portfolio, which could include some bonds, some fixed income in there. So you're getting a decent rate of return. In our mind, even in the most conservative portfolios, and I've said this before as well, is you should be getting about 3% net of all fees and expenses per year to keep pace with inflation. We use the 3% inflation rate in our planning process that we follow. So, even like I said, even in the most conservative, you should be netting at least 3%. If you're not, you are losing purchasing power. But great question. Certainly if you want to give us a call, we can show you what, something like that looks like. I've come across this numerous times, but I can show you sitting in too much cash too long could be detrimental to your financial future.
And the bottom line is, if you have that much cash sitting in a savings account, it's certainly not achieving that kind of interest for sure. And you are, as Mark said, losing purchasing power. Jack in Marana has a question. Jack says, I counted up the mutual funds in my IRA, and it appears that I have 33 different funds. Is that adequate diversification?
Well, that's a great question, Jack. You probably have too much diversification. And so what that means is, especially if they're the same fund families, you probably hold, and I'll use Apple as an example. A lot of the stock mutual funds out there have Apple in it. So if you own 10 mutual funds, stock mutual funds, and they all have Apple, are you really diversified? If Apple goes down in one, it goes down in all of them. And so that's not really diversification. And if it's the same fund family, that's even more the case, is what we typically find, because you a lot of times have similar or same managers that manage multiple funds. So there's a thing called overlap. So you're not as diversified as you think you are. And in some cases, you're so diversified that you can't even make any money because one thing is knocking out what the other one's doing. So there's something that you have to be concerned with, and we can run an analysis for you if that's something you're interested in, kind of show you that. But 33 different funds is a lot.
I have one more question here, one more quick question before the end of the show today from Annie in Benson. And Annie says, I'm 55 years old. I have about $300,000 saved for retirement, but I feel like I'm really behind where I ought to be compared to most people I know. Am I in trouble?
Well, thanks for the question, Annie. I don't like to compare, where you are. Are you on average? Are you doing better or worse? There's always people that are doing better, and there's always people that are doing worse. That doesn't really help your situation, though. You need to know what your number is. What I mean by that is what age you're looking at retiring, how much you're going to need in retirement, either per year or total, and we can help with that. And then we can figure out if you're on track or not, or how much you need to start saving in order to be on track, or what changes you need to make in your plan to get you to where you need to be. And so, I wouldn't focus on, if you have more or less than your neighbor. It really doesn't matter because everybody's goals and objectives are the same. You might be retiring at 60, your neighbor might be retiring at 65. You might need more money, they might need less, or vice versa. All these different factors weigh in. So again, it's important that you have a plan at that age. 55 is a great year to start doing some planning if you haven't already, to kind of figure out how much you need to be saving, because it gives you enough time to really hone in on what you need to be doing now, rather than if you wait longer, then you're going to have to put more in if you're short, that sort of thing. The more time you have, the more options you have. So great question. We're happy to help. Feel free to give us a call and we can sit down with you and kind of help walk you through what a plan would look like and how that would help your situation and help you focus on what it is that you're trying to accomplish.
Mark, I know that you would love to have a lot of our listeners today reach out with a phone call. What happens when they walk into your office?
Well, Ron, we've had some great questions. And if anybody's interested, if you go to the website, which is savingwithsilverman.com, click on media, there's a radio tab. You could submit your question and maybe we will answer it here on the air. But for those of you that are listening, now's my chance to ask you a question. And can you answer it honestly and objectively as possible? Aside from the happy hellos and how's the family, and aside from the occasional lunch or golf game, I get it. I'm as much friends with so many of my clients, they become true friends over the many years. But I think the question has to be asked, especially in light of the stakes. Is your current financial advisor truly adding value beyond a doubt? And I repeat, is your current financial advisor truly adding value? It's a valid question, as a relationship or friendship allows you not to be in a position to ask those critical questions. Are you talking about taxes? Are you talking about Social Security and income and risk and diversification and insurance and estate planning and healthcare? Are you having those annual reviews, but hopefully it's more frequently than that? Is there detailed follow-up? Is there accountability? If you are, if all of that is happening, congratulations, because you've got a great relationship, and send your financial advisor a thank you. But if you're not having that, if you're not feeling the value, if you're not having these in-depth conversations, then you owe it to yourself and really to your family to have a conversation with someone else, because if you don't, you're the one that's going to suffer. You're the one that's going to pay the cost, and it'll cost you in more ways than you'll ever know. Let us prove to you how we can help your money go further in retirement. Let us show you with our financial physical. I believe you'll be surprised at what you'll learn, and this won't cost you anything. Give us a call or send us a text to 520-333-7601, 520-333-7601. That's 520-333-7601. Or check us out online at savingwithsilverman.com. That's savingwithsilverman.com. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
Once again, Mark Silverman's number is 520-333-7601, and you can call or text 520-333-7601. Come in and have a conversation about your situation. It's all about achieving peace of mind. During your retirement years, a lot of things have to be taken into consideration. Your lifestyle, when you want to retire, and all that sort of thing. 520-333-7601 is your number to call to get some answers. Come in and have a conversation with Mark Silverman with no obligation and no cost. 520-333-7601. Call or text. I'm Ron Stutz, along with Mark Silverman, a certified financial planner professional and the founder and the managing member of Silverman & Associates in Tucson. And Mark, it's been a pleasure spending an hour with you today.
Ron, it's been a great show. I want to thank everybody for taking the time to listen. And if we can be of any help, feel free to reach out, and take care and have a great week.
Join us again next week for the next edition of Saving with Silverman.
Silverman & Associates Wealth Management, LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, product, service, or investment strategy. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified advisor, tax professional, or attorney before implementing any strategy or recommendation discussed herein.